Hello, everybody. Welcome to today's episode. We're going to talk about Rivian, a Tesla competitor. Rivian is an early stage electric vehicle startup company that started mass producing cars last year. If you stay to the end, we're going to have a full bull and bear thesis breakdown with a fellow Seeking Alpha contributor. My name is Jacob Braun. I write for Seeking Alpha, and I contribute to a weekly Monday night episode here on Best of Us Invests. If you want to check out my stuff, I'm going to share my screen. You can see my Twitter. My Twitter is real Jacob Braun. If you want to reach out to me, if you want to see what I'm up to, just check it out. Follow me. Reach out to me. And let's take a look at our company, Rivian Automotives. Right now, it has a market cap of $32 billion, negative 6.89 earnings per share, 52-week high of 179, 52-week low. We're seeing right above it. Right now, we're at 41. It's at $33. The company IPO'd at it says $100. I believe the IPO price was low 80s, but it opened at 100 due to the very high demand. Right after the IPO, we can see that high demand because the company goes and eventually spikes at that 179 mark. And ever since that spike, it's been a slow, steady decline. Part of that's due to eroding market conditions, but part of that's due to people starting to get rid of the hype behind the company and look into the actual company itself. Since its IPO, though, I mean, we opened at a price of $100 and we're at right at 40. So we're at 40%-ish of the initial price that people were buying at. And from the all-time high, we're at about a fourth, 41 to 179. So these are not good prices. Some people see right now's price as, they're buying a bargain compared to what people paid on a little bit while ago. But I would say hold your horses a little bit. And we'll talk about this later with our contributor. But this company, there's a reason it's been falling, and that's because they missed on earnings recently. They recently had a bunch of public backlash because they raised prices on the over 80,000 people who have already prepaid and are waiting in a queue for their cars. So they've had some PR misses. Whistleblowers come out from the company, and the company's really struggled to ramp up production. So there's some issues, but on the other side of that, the company is backed by some major players. For example, George Soros, a billionaire investor, GM is backing them, Amazon's backing them. So the company has some very big, strong backers, but the company also has had some issues it's overcoming. So the question is, which way will overcome? Will the strong support and the very neat car take the company to the next level, or will the company succumb to all the issues it's facing and not be able to make it out? If you remember, one, there's a ton of electric vehicles companies right now. The big names, Lucid, Rivian, Tesla, NIO, but also you're competing against all the legacy automotive companies because everyone wants to get into electric vehicles right now. So high competition space. Two, the vehicles automotive space is very competitive. Only one major or two major now companies have never gotten a bailout from the government, American companies. So it's a very competitive space. Many companies have failed. Well, will Rivian be the next one to fail? That's the question. Not all these electric vehicle startups are going to be able to make it out. And for me, you'll hear my opinion later in the bull and bear thesis. I'll give you a little preview. I'm a bear. If you just look though, again, we'll see where it ends up going. The Seeking Alpha as a whole, which is multiple authors, gives us a hold, so kind of a weight. If you look at Rivian's site, man, I'll tell you one thing, they have a very good product. I first heard about the company 3-ish years ago when I found out they were coming into my town. The town I grew up in, Normal, Illinois. I grew up in Bloomington. Normal is kind of a twin city sort of deal. The Normal, Illinois is where the company's main manufacturing factory is. Their first one. They're creating a second one in Georgia now. But so I've kind of always had an attachment to the company, and I've followed them very closely. And seeing them and seeing their actual cars is a very big deal to me. If you look at their cars, they look slick. They have a lot of features, and they're made for outdoors people. They have a niche market compared to many electrical vehicle companies because they're kind of more the outdoor SUV truck market. For example, Tesla's more of a luxury and sedan market, so they're not competing directly with Tesla. Yeah, they're both in electric vehicles, but this is competing more against the Cybertruck of Tesla's, which isn't even out. So they have a very slick product. They've had a little bit of a rough patch. So why don't we hop on over to our bull bears just so we can have more in-depth takes on the company. With that, guys, Justin, would you be able to introduce yourself?
Hey, thanks. I'm very excited to be here and then excited to talk about the Rivian. So, my name is Justin Lee, founder of Cappuccino Finance, and I also just started a YouTube channel, so you guys should check it out. And also, I share my financial analysis on a Seeking Alpha.
Thank you for that, Justin. Would you be able to give us a bull case on Rivian?
Yes, so there are a lot of exciting thing about the Rivian, their product and their market outlook and overall EV industry. But thing that most excited about them is their segment that they're targeting. So they're targeting the SUV and then truck market. And then that segment is a lot less crowded compared to the passenger car. So in the passenger car, obviously there's a Tesla and then GM, Volkswagen, and like all the major company kind of introducing a new like model just about every quarter. Whereas SUV and the minivan market, it's like not that many companies are targeting. So I believe the Rivian can establish much easier to kind of establish themselves as a leader and then defending the market in the future. And the second part is people just love their product, and then experts have a very positive opinion about their SUV and truck. So reflecting this popularity, so they have a substantial backlogs already. So based on the last earnings call, so they have 83,000 backlogs of SUV and then truck. And also recently the Motor Trend magazine selected their R1T, the truck, as the truck of 2022. So they're kind of showing the reflection of the popularity and enthusiasm both from the customer and the expert in there. So I think that they're going to be very successful. And also looking at their financials, so they have $18 billion in cash in a balance sheet, and then they lost $2.6 billion on operating, probably like expanding their like workforce and hiring a lot of people and also building a new plant. And then looking at doing the pretty simple calculation, $80 billion and then like a negative 2.6. So it take about 6 or 7 years to burn through that cash they have. And I don't think it's going to take them to like 5 or 6 years to turn the operating cash positive, given their growth and popularity and then their like kind of superior product. And also they're backed by Amazon. So Amazon already have 100,000 orders of the delivery van they're going to use. So financially they are very secure. So the kind of startup company is very important to have a financial resource, and I think they certainly got that. And the next part is not. I believe the EV overall sector will get benefit from this rising oil price. So during the pandemic, oil and gas company made a substantially less investment, and that underinvestment. So developing oil well and then pumping out the oil take about 2 to 3 years to kind of establish that. So impact of that underinvestment during the pandemic, like 2 years ago, is about to show right now. So there's already a little bit of kind of concern about the supply constraint, and then now the Russia invasion of Ukraine can add one more levels of kind of uncertainty plus the oil supply. So I expect the oil price to stay up high, and they kind of looking at the consumer looking at this $7 per gallon price tag on the gas station. I think they have a much higher incentive to kind of switch over to the EV. So I think that elevated energy price and the oil price, I expect them the EV to take advantage of that. So the overall Rivian have a very strong product, have a very good like a selection of the niche they are targeting. So I believe they will establish well as a leader in the future. And then their popularity and then the enthusiasm from expert will fuel their growth in the future. So I really like their company.
For sure. Thank you for that, Justin. So now just giving more of a bear take on the company. As we talked about earlier, the company really exploded in value after the IPO. And I think that was mainly centered around hype for the company. This company, people love their product. It's won many awards for their products. When it was first revealed at an LA car show, journalists, fans were all in awe of the product. So they have a very good product that a lot of people like. However, the company is now being forced, people are being forced to look at the company for itself without the hype, in part because of the poor market conditions, and in part because they're not doing as good as people originally expected. For example, on the Q4, they missed on profit and revenue. Not a big deal. They're a very early company, and it's supposed to be a high growth company, but still, that's not something you necessarily want to see. You don't want to see them missing on profit or revenue. Another thing, they've had trouble ramping up production. They're ramping up production, one, much slower than they expected, and two, they started production later than expected. Again, in parts can be blamed on COVID-19 and all the issues that went along with that, as well as supply chain issues. But again, not something you want to see. You don't want to see these ramp up issues. And Tesla, it's infamously, Elon Musk said that Tesla almost went bankrupt trying to ramp up Model 3 production. So this automotive production is notorious for being very difficult to ramp up and still keep quality and keep a good price. Tesla's dealt with the issues, but seems to have it figured out. And all the legacy automotive companies have dealt with many issues over the years in the same thing. So with Rivian being such a young company, I think that these issues are just the beginning. Additionally, they recently raised prices 17 and 20% on each of their cars sent from their initial launch prices. And well, this makes sense. We have inflation, prices have raised and whatnot. But the concerning thing about this is that a whistleblower came out, someone who used to be an executive there, and said the company knew they were losing money on the original price, but they IPO'd with the original price to increase investor sentiment. So I don't think anything will necessarily come of that, but it just shows you that the company has to have a much more expensive product than they initially led you to believe, whether that's because of supply chain issues and inflation, or whether it was intentional. Another thing, so I think the biggest thing with the company is the Amazon order of 100,000 vehicles. That right there will give the company so much revenue. The problem with this is Amazon's hedging their bet. They have a stake in Rivian, but Rivian's not the only company they're buying electrical vehicles from. They actually have also said they're going to order thousands of vehicles from electric Ram vans from Stellantis, which is a small company from the Chrysler Fiat automotive group. So Amazon's going to other companies as well, which makes sense. Amazon has needs for a lot of electric vehicles, but the point is they're not solely reliant on Rivian anymore, which again just kind of shifts away from the strong thesis behind them. And then finally, it really comes down to this: the automotive field is very competitive, and Rivian's a very early on company. They have a great product, but we just don't have that much of a track record for them. And for me, I want to see more of a track record before I fully invest in it and have some of these questions and concerns kind of answered for me to invest in the company. May I miss out on some profits? Yes. But I feel that having the better knowledge and having the stability from waiting a little bit longer is worth it for me in this case. With that being said, Justin, do you have any final words, and where can we find you?
Yeah, thank you very much. And always kind of excited to talk about having the chat with you. I learned a lot in the process. So yeah, you can find me at my blog, cappuccinofinance.com. And also, as I mentioned, I have a YouTube channel, the Cappuccino Finance. So you guys check it out. Thank you very much. Thanks for the invitation too.
Yeah, thanks for coming on. Always love to talk to you as well. And with that being said, thanks for watching, everyone. If you have any questions or comments, please reach out to me on my Twitter. I'd love to talk to all of you guys.